Imagine a wave of capital bigger than anything we've seen before rushing into crypto this year, and here's why that matters. Stay tuned, because in just a moment I'll unpack 3 explosive headlines that could reshape the market. If you're serious about staying ahead in crypto, hit subscribe and ring the bell now so you don't miss what happens next. First, JP Morgan reports something staggering. Crypto inflows into digital assets have surged to $60 billion year-to-date, actually outpacing private equity flows this year. That's right, money is pouring into crypto faster than traditional private markets. They credit new U.S. legislation like the Genius Act for stablecoin clarity and the Clarity Act defining digital assets as securities or commodities. This regulatory certainty has unlocked investor confidence and unleashed capital from both venture and public market channels. Now add together fund flows, CME futures volume, and venture funding, and you've got a tidal wave of demand. Since May, JP Morgan says inflows jumped nearly 50%, putting crypto on track to exceed last year's record. Institutions and retail alike are seeing crypto not as fringe, but core portfolio allocation. The impact? Market liquidity is tighter. Altcoins, most notably Ether, are gaining renewed interest, and public companies are even loading ETH and BTC into their treasuries. Imagine that. Digital assets now competing with private equity as orderly mainstream capital destinations. Here's why it matters. When capital inflows cross that $60 billion threshold, we're not talking retail hype. We're talking structural, institutional demand that tends to reduce volatility, extend bull runs, and attract further momentum. For you watching, that means more sustainable uptrends rather than flash crashes. And it sets the stage for the next 2 stories I'll share. Now turning to Bitcoin whales, big players making multi-million-dollar bets. One whale just placed a $23.7 million bull call spread, buying the December $140,000 call and selling the $200,000 call, effectively wagering on BTC hitting $200,000 by year-end if conditions allow. That structure limits risk to the $23.7 million debit and caps upside, but it signals conviction. Someone out there truly believes BTC could double again this year. Meanwhile, BTC has been trading in a range around $116,000 to $1,000, but open interest in options is near record levels. This whale strategy tells a deeper narrative. Even as price consolidates, whales are loading up on structured bets. High open interest suggests heavy institutional options engagement. Temperature check. This isn't speculation by individual retail traders, this is coordinated capital direction. If Bitcoin breaks higher and reaches that $140,000 strike, or even pushes toward $2,000, profits could follow quickly. Beyond the headline, what does that mean for smaller holders? First, heavy whale demand can create support zones and positive gamma cycles. Second, if momentum builds, we could see short squeezes and leveraged reaction trades retail can ride. And third, all of this consumer-facing commentary feeds into market psychology. People hear about $200,000 targets and FOMO kicks in .so together with JP Morgan's inflow story. This option trade reveals both broad capital interest and targeted big-ticket bullish forecasting. It sets up Ether next. Finally, Ether and a bold prediction from Galaxy Digital's Novogratz ETH is likely to hit $4,000 soon and could outperform Bitcoin in the next 3 to 6 months. Analysts describe a historic short squeeze in motion short. Positions at all-time highs were overwhelmed as ETH price surged 20% in a week, triggering forced liquidations. According to the Kobayashi letter, Ethereum has added over $150 billion in market cap just since July 1st, and another 10% price increase now could liquidate another $1 billion worth of shorts and catapult ETH toward 400 Novogratz. Adds context. Institutional inflows via spot ETH ETFs BlackRock, Fidelity, Grayscale in July alone topped $3.2 billion, while public companies such as Bitmain and Sharplink have added over $1 billion ETH to their treasuries. He argues supply is tightening, demand is increasing, and Ethereum could not only break the $4,000 ceiling, but even outperform Bitcoin in the months ahead. Imagine the storytelling arc. Crypto draws capital at scale, Bitcoin whales bet on massive upside, and Ether driven by DeFi utility, staking yield, ETF access, public treasury adoption, and technical short squeeze all lines up for a potential breakout. This mosaic of headlines forms a narrative that crypto is no longer speculative fringe, but a structural asset class in real time. So let's recap. Capital inflows hitting $60 billion year-to-date are outpacing private equity. Whales are placing multi-million-dollar options bets targeting $200,000 BTC, and Ether is building momentum to breach $4,000 and possibly even eclipse Bitcoin in performance amid ETF inflows and a historic short squeeze. These stories interlock. Institutional confidence, extreme bullish sentiment, and technical fundamentals. Looking at the bigger picture, we face questions. Can regulatory clarity continue to enable inflows? Will whale conviction translate into actual price follow-through or fade as expiration approaches? And will Ethereum's current momentum give it the edge in the altcoin cycle? Those are the puzzles worth debating. What do you think? Do you expect crypto inflows to keep accelerating and support both BTC and ETH? Do you believe a whale's $200,000 target is realistic before year-end, or is that wishful hype? And will Ether truly outperform Bitcoin, or is that a myth? Leave your thoughts in the comments below. If you enjoyed this deep dive, please like the video, subscribe to the channel, and click the bell so you never miss a breaking market insight. Thanks for watching and see you in the next one.